Hey, good evening traders. It's Mark here from Trade and Train, and it's 20 to 4. No, it's not. It's 10 to 4 here in the UK. Just taking a look at a couple of charts because the markets are getting quite interesting. It's been a very patient week from us here. Not really been that active, although we are now getting very close to seeing some potential opportunities. We're going to start with the dollar index. If we look at this on basically the daily chart, you'll see that we are sitting currently right now in an uptrend on the daily chart, but this is just short term. You can see here we're creating those higher highs and higher lows. Now that doesn't necessarily mean that this market is in a predominant uptrend. It just means short term we are seeing market momentum to the upside. But before we look for long trades now, we need to see that shift in sentiment where we currently sit. Now, if you look at these impulsive candles that have been coming down, you can see that the bodies are quite significant. The candles are closing near the lows. But if we look at yesterday's candle, you'll notice that it was a small body and a wick. Now, today's candle again is, we've still got what, best part of 6 hours left of the trading day, but it's a very small candle in relation to the previous 3 days candles, and similar to that of yesterday's. So what this kind of sort of insinuating is that the market is running out of steam, and we'll be looking for that next impulsive move to the upside. So how can we look at trading that? Well, it's quite simple. If we just drop down the time frames, you'll notice that the market is forming a bit of consolidation. Now, what traders tend to do is they'll just jump into the market and they'll be buying when it's down here because there's a significant level or there's some kind of support level, and they'll just jump into the market without actually seeing that commitment from the bulls buying US dollar or selling the other respective markets. So essentially we just want to see this consolidation that's in here, and you can see that the market has just been doing nothing but forming a base. Now, before you get long or short, you want to see this resistance level or this support level has been broken. Preference is to the upside. Why? Because the short-term trend based on the daily is to the upside, and now we've seen lack of momentum. We can add in some other factors. We can look at speculators in the commitment of traders report massively short. We can look at seasonal bias for February is generally strong for the US dollar. So we've just got to wait for that commitment and that shift in sentiment. Once we see that break and that change in cycle, so above 90.5, then we can start saying, right, okay, now it's our opportunity to look long for the dollar index. So if we're looking long dollar index, that means potentially we want to start looking short euro. Now, let's just jump to the daily chart. You'll see very similar sort of setup. You've got a low, lower high, lower low, and we're coming back into point of control, and where we could then potentially see this market run off back down. Now, if we are going to see this market break, that'll mean a break of yesterday's low. And if we go to the hourly chart, you'll see a very similar setup to what we were looking at on the dollar index. We've formed a period of consolidation. You can see that the market hasn't broken out. It hasn't given us any additional sort of factors to bring into this. You can see here price did break that high, potentially trapping in those bullish traders, and then it's come straight back in the zone. So anyone that was trading a breakout of these highs are now going to be sat in an offside position, and as soon as you come back into the range, you've got to decide whether that's your trade done, because you might have to sit and watch it come all the way back down here, and then it's the question of, right, has this market topped out and we're now going to see it start its next move back down towards 120.50 to 120.40, and that's obviously meaning, if you're a trader and you've taken that breakout trade long, how quickly are you going to react and kill this trade, or you're going to sit through it and potentially take your 1% or your 2% hit, depending on what risk management techniques you take. So our preference is waiting for the market to give us a clue, and the clue for us is based on those daily candles, and we're potentially going to see this market roll over. So I'll be looking for a break of 121.10 and then looking to trade on a retest of 121.10. The market that's been on the move for the past few days is cable. Cable has literally just, since the Bank of England last week, which is this candle here on the 4th of February, since they basically ironed out that negative interest rates weren't actually going to be brought into play unless absolutely necessary. That literally just gave this correction that was happening on sterling a real knee-jerk reaction, and since then the market's gone from what 135.60 up to 138.60, so it did 300 points in a straight line. Usually after some kind of movement like that, and you know, if you do use your moving averages, you can look at your 20 and your 50 and you can see how this market generally pulls back to those moving averages. We're massively overextended, and very much like the euro, if we look at these candles, big bullish candle, rejection candle, again bullish candle closing near the high, bullish candle closing near the high, bullish candle closing near the high, and then we actually, for once yesterday, this candle gives a wick to the high and a smaller body, so you can see the momentum actually running out of steam. Now if we drop down to the hourly chart, let me just lose those moving averages for a second, and I'm just going to scrunch in a little bit more data. You can see on the hourly you've got a nice rising wedge being formed, and price did break out of the rising wedge earlier today, but we are struggling to pierce this 138.12, 138.10 area. Now again, trading opportunity here, the base has been formed, we've broken out the wedge, but how do we want to trade it? Well, simple. As soon as we get underneath this floor that's been formed, 138 even handle, maybe we'll look for price to move lower, then come back to retest that area. And initial targets, you know, you've got a strong daily level at 137.50, so that's a 50-point move, so price might come in there, but based on the formation that we have here, I would expect price to at least come back to 136.50, the monthly pivot, and then depending on the type of correction that comes into play and whether we get this full seasonal bias for the US dollar, we might even see 134.50. I know some of you might think I'm absolutely crazy by thinking that the cable could retrace that far, but listen, all I'm saying is that based on statistics, based on probability, that is something that could happen, but we do trade what we see. You know, if price breaks through these highs, well then obviously we shift sentiment and the dollar isn't going to follow seasonal bias, pound isn't going to follow its seasonal weakness, which is its worst performing month of the year in February, and we'll be looking for further moves to the upside. So you know, we lay all that in line and we have an if done scenario of how we're going to look for these trading opportunities. So that's one to watch out for. Take a look at Swissy as well, because Swissy is another chart that has given us a real sort of technical opportunity. So we've got our inverse, oops, let me just put that back. Sorry, I just caught my line there. So I'll bring that back in. So we had a nice inverted head and shoulders. Let's just, I'm just gonna bring this chart full into view so you can see it properly. So looking at USD, CHF, Swissy, you can see the inverted head and shoulders on the daily chart that we've been watching, and it's played out perfectly. It didn't really give you an opportunity to get on a retest here, it just kept going. Came up, test the monthly R2, and now we've pulled back, and you can see prices come back into that 50% retracement. Now it's a 50% retracement from X to A, which is the whole move from the major swing low to the major swing high. If we look at the interim move from X to A, it's also a 38.2 fib retracement. So we've got multiple levels here for fib confluence and looking for that fib overlap. So we're looking now for opportunities to get long here, which will coincide with the dollar index breaking 90.5. If we drop down to the hourly, you'll see a very, very similar sort of setup to what we were looking at on the dollar index, which is price working within, on the dollar index it was a rising wedge, but you can see how price has been operating within this descending channel. It tried to break, and then literally it's just been sitting in consolidation. So what we need to see is price break out of this consolidation properly. We can see those bulls come into the market. Then we'll look for that first higher low or some kind of flag pattern or consolidation to get long, and then we'll trade this back up into this direction. And obviously we have our different trailing stops to maximize potential profit returns. So I think there's three really good trading opportunities to look out for there. But remember, none of those setups might actually happen. We've got to wait. There's an if done scenario in place, and then we take advantage of the market should it present itself to us. Now, if you are really struggling on putting trading plans together, understanding if done scenarios, understanding higher time frame analysis, bringing it down in how to find the most accurate smaller time frame entries, or even things like the commitment of traders and seasonal analysis, then maybe what you should do is jump on one of our free webinars. We host a free webinar every Thursday night. It's hosted by myself and one of my most experienced traders of Trade and Train. And we run through all market conditions, you know, the different types of scenario you can find yourself in, different types of analysis, how to get started, anything like that. And you know, you feel free to ask us any questions. It is live, it's not recorded, and we're literally, the doors are open to all new and experienced traders. We love basically growing our community of traders. If you've got any questions about the charts that I've just shown to you, please comment below. If you have liked the information, please hit like, share and subscribe, and we look forward to seeing you in our latest videos. Take care guys, trade safe and keep your risk to a minimum.